Can you believe that we are currently experiencing the lowest level of housing activity since August 2010? The U.S. housing market has seen a significant decline in activity, with sales of previously owned homes falling by 4.1%. Yes, you heard it right, 4.1%, which is just under 3.8 million units. But it's not all doom and gloom. On the flip side, median existing home prices have risen by 3.4% year-on-year, reaching a new all-time high of around $390,000. So while the number of sales have decreased, the value of those sales have actually increased, which is quite the paradox. Now you might be asking yourself, why is this happening? Well, the slowdown in activity is primarily attributed to a lack of supply rather than a decrease in demand. You see, soaring mortgage rates have deterred existing homeowners from selling their homes. The average 30-year fixed-rate mortgage has shot up from 3.1% to a whopping 7.4% between November 2021 and now. But that's not all. Low inventory levels have further contributed to the sluggishness in the housing sector, with estimates suggesting a shortage of 1.5 million to 5.5 million homes in the U.S. That's a big gap to fill. While this may seem like bad news for buyers, sellers are experiencing a windfall, with homeowners accumulating over $100,000 in housing wealth over the past 3 years. How exactly do high mortgage rates impact the housing market? Let's dive in. Picture this. The average 30-year fixed-rate mortgage has catapulted from a mere 3.1% to a whopping 7.4% between November of 2021 and now. That's more than a double jump. But what does this mean for you and me? Well, these soaring rates have a ripple effect on the housing market. It's not just about the numbers on paper, it's about the decisions people make based on these figures. Think of homeowners who are considering selling their homes. With higher mortgage rates, they have to weigh the costs of selling against the prospect of a higher mortgage payment if they decide to buy another house. In many cases, they decide it's not worth it. So, they stay put, and their homes stay off the market. This is how high mortgage rates contribute to the sluggishness in the housing sector. It's a domino effect, really. Homeowners are discouraged from selling, which leads to fewer houses on the market. Fewer houses on the market mean less choice for potential buyers. And less choice can drive up the prices of the available houses, making it even harder for people to afford a new home. But here's the twist. While it may seem like a seller's market because of the high prices, the lack of buyers due to high mortgage rates can make it difficult for sellers to sell their homes, so in a way, it's a buyer's market. But with fewer houses on sale and high prices, it's turning into a tough market for prospective homeowners. High mortgage rates have created a buyer's market, but with fewer houses on sale, it's becoming a tough market for prospective homeowners. With an estimated shortage of 1.5 million to 5.5 million homes in the U.S., low inventory is a significant problem. But what does this mean for buyers and sellers? Well, let's dive in. Low inventory levels have a dramatic impact on the housing market. Essentially, it's a supply and demand scenario. When there are fewer homes available for purchase, competition among buyers increases, driving up the prices. This is exactly what we've been seeing recently. The slowdown in housing activity is not due to a lack of demand, but rather a lack of supply. Mortgage rates have soared, discouraging homeowners from selling. The scarcity of homes has led to a rise in prices. Last month we saw the median existing home price reach an all-time high of around $390,000. But remember, this doesn't necessarily mean that the value of these homes has increased. It's just that the demand is outstripping the supply, so buyers are willing to pay more. So, who benefits from this situation? Well, if you're a seller, you're in a pretty sweet spot. The shortage of homes has created a seller's market. Homeowners have even been accumulating over $100,000 in housing wealth over the past 3 years due to the price increase. But it's not all roses. The downside is that if you're selling your current home with the intention of buying another, you may find yourself on the other side of the coin, battling with other buyers for a limited pool of properties. For buyers, the challenges are clear. With fewer homes on the market, buyers have less choice. They may have to compromise on their wish list or even settle for a property that doesn't fully meet their needs. And then, of course, there's the price. The competition among buyers means that properties are often sold for more than their list price. In fact, homes are selling quickly and often above their list price. Low inventory levels have created a seller's market, but with fewer choices available, buyers may find themselves paying more than they bargained for. With the current state of the housing market, what can we expect for the future? As we navigate through the complexities of the housing market, we can't help but wonder, what does 2024 hold for us? The future, as always, remains shrouded in a mist of uncertainty. However, a few educated predictions can be made based on the trends we're seeing today. One of the most significant roadblocks expected to persist into the first half of 2024 is the issue of supply. The shortage of homes has been a persistent thorn in the side of the housing market. Estimates suggest a deficit ranging from 1.5 million to 5.5 million homes in the United States alone. This lack of inventory has contributed to the slowdown in the sector, and it doesn't appear to be resolving itself anytime soon. But what about potential solutions? Well, one proposition that's been floated around is a government tax incentive. This would be aimed at encouraging homeowners to sell their properties. The rationale behind this is simple. By incentivizing the sale of homes, we could potentially increase the supply of available houses on the market. However, it's important to remember that this is only a proposed solution, and it would need to be carefully considered and implemented to ensure it doesn't inadvertently exacerbate other issues. This said, it's crucial to remember that the housing market is a complex machine with many moving parts. A change in one area can have unexpected repercussions in another. For instance, while a tax incentive might increase supply, it could also inadvertently fuel a further rise in house prices. So, what's the takeaway here? Well, the housing market of 2024 is expected to continue grappling with the issue of low supply. Potential solutions are on the horizon, but they come with their own sets of challenges. While the future of the housing market remains uncertain, one thing is clear: the decisions made today will have far-reaching impacts. Navigating the current housing market can be challenging, but don't worry, we've got some tips to help you. Let's start with the buyers. Patience is truly a virtue in this scenario. With inventory levels at a low, finding the perfect home might take longer than anticipated, but don't let the pressure push you into settling for less. Your dream home is out there, it might just take a little longer to find it. Next, due diligence is more critical than ever. With prices at an all-time high, you want to ensure that your investment is sound. Make sure to thoroughly research the property, the area, and the market trends. Get a quality home inspection to avoid any hidden issues that could lead to costly repairs down the line. And finally, don't rule out new homes. With the lack of supply boosting demand for new homes, this could be a viable option. New constructions often come with warranties and are typically more energy efficient, which could save you money in the long run. Now, for the sellers. The current high-demand market can be a golden opportunity. With inventory low and prices high, you could potentially make significant profits from selling your home. But it's important not to get too greedy. Overpricing your home could lead to it sitting on the market for longer, which could deter potential buyers. And remember, timing is everything. Pay attention to market trends and aim to sell when demand is high and supply is low. This could maximize your profits and ensure a quick sale. Lastly, consider offering incentives to make your home more attractive to buyers. This could be anything from contributing towards closing costs to offering a home warranty. Small gestures like these can give you an edge in a competitive market. Whether you're a buyer or a seller, understanding the current housing market can help you make the best decisions for your future.